$8 in March as higher crude prices and rising gold demand raised the import bill. And a massive fire has ravaged the iconic Notre Dame Cathedral in Paris. No casualties have been reported in the incident. Well, let's take a look at the trade setup for the day. It was largely a lackluster day of trade for the US markets after earnings from large banks like Goldman and Citigroup came off. Now remember, we were talking about how it was important for earnings to deliver for the S&P 500 to go past that 2930 mark. Yesterday's session wasn't the one that would have done that, and as a result of which the S&P 500 stays about 1% off from those highs. That's the remarkable move that we've seen since the December lows. The red marks the December lows, the red area, and then the remarkable up move that we've seen. But now we are about 1% off from what will be historic highs yet again. But I must say, as I said and as I read across articles on Bloomberg.com, that earnings need to get delivered for this to happen. Otherwise, there are no immediate triggers for the S&P 500 to move higher. What about our markets? And therefore, what the S&P 500 move and what the Asian move does to our markets, precious little, because we'll start off on a flattish note. The rest of the Asian screen has showed that, and I think the SGX Nifty is showing that too. But yesterday wasn't a bad day for the Indian markets. There was fair bit of long build-up on both the Nifty and the Bank Nifty OI for the April futures. Options data indicates similar as well. And the mood on both IT and banking was pretty sanguine. However, I must say that everybody who is investing afresh into financials is paying heed to the valuations that the stocks are trading at. I think the statement from Goldman Sachs, as they've come out with the report on financials, says it all, because they're saying that the confidence has returned to the financials, but valuations are high, and therefore one needs to be very, very selective when you go out and choose the financial names. And I think that's what's happening in the markets. The last few days, you have equal number of gainers and losers if you look at the contributors list on the Nifty in terms of the financial names. Flows, however, continue to be positive. In yesterday's session, both DIs and FIs bought in about 713 crores from the FI side, about 581 crores for the DI side. So DIs have had a good buy figure after some time now, and that is pretty interesting. Net not a very large number, but still positive cues coming in on the flows. However, that didn't do much to the rupee. It ended at about 69.42 versus 69.16, and that's the second straight day of weakness for the INR vis-a-vis the dollar. Not too many macro cues, as I said. The trade deficit number widened, but I don't think the bond yields will really take that into account too much today. However, what is to be watched out today? A couple of things. One, the results. Wipro numbers come out today, Mastech come out today, and Den Networks would be an interesting one. 5 Paisa Capital is okay. It probably gives you a sense of what's happening on the brokerage side. But otherwise, these three are the ones to monitor in the session today. And an important listing, Polycab. Remember, Metropolis and a couple of others have brought the traction back into the primary markets. This one got heavily oversubscribed, and therefore it'll be very, very interesting to see what Polycab does in the session. So do watch out for this stock in trade. However, stocks to monitor at about 9 a.m. or 9:15 a.m. There are a bunch of them which could be potential movers in the session. Dr. Reddy's, they've received an EIR from the US FDA, which classifies the Bachupalli plant as voluntary action initiated. This contributes around 40 to 45% of the US sales. While there is no financial impact as per the analysts, there is a sentimental impact for sure. Dr. Reddy's should react positively to this piece of news. Tata Metallics, the EBITDA was down about 8.1%, margins corrected to 13.6 versus 16%. Raw material costs essentially moved up quite significantly for Tata Metallics. As a result of this, you would see the stock react a bit in the session today, maybe slightly negatively. Let's wait and watch there. Prestige Estates, it's an interesting deal, and the reason I find it interesting because here's a large player which can go out and build buildings on its own, but they've acquired 15% stake in a company called Babji Realtors. It's in the business of developing and leasing of shopping malls. So a large Bangalore-based player has gone out shopping for about 360 crores. Just makes one look at the confidence that the good players have on the business momentum right now. Let's see if Prestige Estates has some reaction or no. This is an important piece of news. Whether or not it brings about a reaction is a separate thing altogether. Metropolis had a very good listing and a very good day on the listing day. 9% higher is no mean feat. But the good news that follows is that R.K. Damani's Bright Star Investments acquired about 7 lakh shares, about 948 rupees. So this is an important monitorable, and let's see if there is a further traction in Metropolis. And as I was talking about Goldman Sachs and how they've come out with a note when they're talking about valuations being heady, they have downgraded 3 stocks in this note. So they're from neutral to a sell. All 3 were neutral, and all 3 are a sell. PNB, LIC Housing Finance, and IDFC First Bank. Let's see if there are negative reactions on these, and let's see if there's a positive reaction on ICICI Bank, because that's the upgrade. But these 3 are the ones that I would monitor today. However, having said that, let's move on and tell you what's lined up on First Word today. The latest bull run in India has lasted for 32 months now, making it one of the slowest as well. Devina tells us why. The ghosts of Kingfisher Airlines are now haunting Jet Airways. Vishwanath tells us what's scaring the lenders. Election season is not turning out to be as lucrative for broadcasters. Sajid Mangat Johnson to talk about that. And then Agam Vakil will tell us what to expect from Wipro, which comes out with its numbers today. It's an important one, third of the big 5, and I'll be very keen to see what Wipro delivers in the session. The first piece, the Nifty 50 may be poised for its longest bull run ever. But historical data and an analysis of that shows that the rally may also be its slowest. Devina Khanna has some charts to explain why. Devina, interesting. Most people would be happy with the bull run, but hey, it's also the slowest.
It is. And you know, just to go by pure definition, we're categorizing bull runs as a period of time where the markets have risen about 20% plus without another 20% drop. So that is considered to be a bear market. So if you take that in mind, from 1996 when we started the Nifty, you've got 8 periods where you've had the Nifty moving up more than 20% at a stretch without taking that break of 20% on the downside. So I'm going to start off with December 1996 to August 1997. Nifty gained about 64%, and within this short period of time, number of positive trading days for the index was about 98 days, so that's not much. Moving on from June of 1998 to February 1998, you had incremental gains of 98%, and the entire period was good because you had closer to 224-day positive trading days. Coming down to April 2003 to May 2004, 113%. Again, then from May 2004 to May 2006, in this period of 2 years, you've got about 170% on the Nifty and 291 trading sessions, which have been positive. The more interesting one are the more recent rallies, and I'm going to come straight down to December 2011 to March 2015. Now, this entire rally lasted for 39 months, where the Nifty has moved about 98%, but has had 440 positive trading sessions, which is actually the longest number of trading sessions that we've had, the largest number of positive trading sessions that we have. And following that is the rally that we're coming to, which is this period, which is the February 2016. It started from there and it is still on. But what has the Nifty returns been? Just about 66%. But nonetheless, the silver lining is that we actually could land up having the largest number of positive trading sessions as well. So this entire rally currently has lasted for about 37-38 months, which is still short of the previous rally, which was lasting 39 months. Now, what has happened within this rally? This is what the average monthly gains have been across the board for all these rallies. And if you see, we are right about here, which is just 1.76% in terms of a monthly performance on the indices compared to the previous rally, which was also not much, about 2.5. But in comparison, it is the slowest move that we've seen over the last 2 years that we've seen this rally culminate. So in the previous rallies, actually the highest was April 2003-2004, when we saw that big uptick, and the monthly gains were closer to 9.5%. Now, what's been happening aside from that, and what is the key factors that we're looking at within this move and in these individual rallies that we've seen? A very interesting thing that we've noticed in this particular rally has been the heavyweight contribution. Now, if you've seen the move of the index from February 2016, there's not been much of a contribution from telecom. There's not been much of a contribution from oil and gas. There's not been much of a contribution from pharma, barring financials and Reliance Industries, which is the heavy-weighted stock. There are 10% weightage there. Most of the others have not really managed to contribute. Even for the mid-cap, the Nifty mid-cap 100 and the Nifty small-cap 100, the gains have been just about 56% and 50% respectively. So it's not been a very broad-based rally. It's been just limited to the top heavyweights. And this is something different from what we saw in the prior to rallies. So in the rally that lasted from 2011 to 2015, you did have your heavyweights contribute, but the smaller weighted stocks did way better than the heavyweights. So it was a more broad-based rally. Mid caps rallied about 85%, small caps rallied about 96%. So that's the key differential that we are seeing. But you can take heart from the fact that this rally is still on its way. We can still actually end up being the longest rally, but the other part being that it's the slowest.
Slowest rally, maybe a lot more concentrated in nature as well. Interesting analysis. Thanks so much, Devina, for bringing that to us. Well, from the markets to individual pockets of strength and weakness and news, Jet Airways lenders meet last evening yielded no decision on releasing the 1,500 crore of funds promised in the resolution plan. Sources tell Bloomberg Quint that fear of prosecution, like in the case of loans to the now defunct Kingfisher Airlines, is holding lenders back. Vishwan Nair reports.
The lending consortium with Jet Airways, led by State Bank of India, has decided to withhold the 1,500 crore interim funding that they were supposed to extend as part of the bank-led resolution plan. Now, according to at least 3 people in the know who've spoken to Bloomberg Quint on conditions of anonymity, this decision to withhold that interim funding was taken because bankers are awaiting some kind of clarification from the government regarding any future action by investigative agencies against these bankers. Remember that back in 2017, the Central Bureau of Investigations had arrested many senior officials from IDBI Bank for extending about 900 crore worth of loans to Kingfisher Airlines, which they classified as a fraudulent transaction because the bank did not follow its own credit policies. Now, bankers are afraid that tomorrow, maybe sometime in the future, investigative agencies might raise questions about the lenders extending this 1,500 crore to Jet Airways, and therefore they need some kind of assertion from the government that none of these issues will crop up in the future. Now, lenders have been supporting the airline in the form of giving up some kind of part payments to its employees, as well as paying some urgent fuel bills so that the airline remains functional, so that any bidder that might come in to buy Jet Airways will find some value in the asset. What we also understand from our sources is that bankers have extended the final bid deadline from April 30 to May 10th, which is part of the whole bidding process that SBI initiated on the 8th of April. Now, as part of the bidding process, 6 investors have expressed their initial interest in the airline. These 6 investors include, of course, Etihad Airways PJSC, which is the international partner of Jet Airways and which already owns about 24% equity stake in the airline. Now, once this whole bidding process is completed, the lenders are expecting that one bidder will come forth who will offer the right kind of value to the lenders to buy Jet Airways and then help them turn it around so that it can continue to remain functional as well as pay all of its dues that are pending. Already, lessors have been grounding planes of Jet Airways because they have not been paid whatever were their dues, because of which Jet Airways' fleet has reduced to only 6 planes. Now, this was according to the Civil Aviation Secretary, Pradeep Singh Kharolia. Now, what is coming out is that without any functional fleet for Jet Airways and with employees not being paid for months, the airline's operational efficiency as well as the future of the airline itself is at question, and therefore an action from the lenders' end is necessary immediately. Back on the 25th of March, the lenders, as part of the bank-led resolution plan, had decided to extend this 1,500 crore debt support to Jet Airways in exchange for the promoter Naresh Goyal to have pledged his equity stake in the company, as well as Etihad for it to pledge its own equity stake in the company, so that the lenders can extend these funds in a secured manner. However, the lenders have so far not exactly done that. Naresh Goyal, on his part, has already pledged about 26% of his equity stake in to Punjab National Bank, so that the banks can move forward. However, it is not yet clear what Etihad has decided to do, whether it will pledge its equity stake or if it will acquire more stake so that it can take over the airline and run it. But all said and done, Jet Airways is currently facing significant liquidity issues, as well as not being able to pay any of its employees or vendors, which of course leads to the question, how long can Jet Airways survive without interim funding from the bankers?
Well, from Jet to media, now election season is when broadcasters hope to make the most from advertisements. But this time, it's slightly different. It's a mix of numerous on-demand video platforms and the new TRAI norms that's thrown the industry in disarray of sorts. Sajid Mangal tells us, why is he saying that the industry is in a disarray? Sajid, good morning.
Good morning. You know, if you look at the entire TV landscape, it's undergone a tremendous shift. Prior to December 28, when the new TRA tariff norms were not there, you had the broadcasters bundling free to-air channel with SD or standard definition or HD channels and selling it in bokeh. That allowed them much more flexibility and push channels which to all the consumers. In fact, many of the broadcasters had pay channel and they had a variety of the same channels was available on some other platform on a free basis. But post December 28, everything changed because the new tariff order made it very clear that free-to-air channels cannot be bundled with standard definition, and standard definitions channel cannot be bundled with HD channels, high definition channels. So that means that each of them have to be separate bundling, which has to happen, and that there's a pay regime which came into being, which capped it at 19 rupees. In 19 rupees, if the broadcaster wants to put his channel in a bundle. But what has happened is that over the last 3 months, from Jan to March end, it took a lot of time for transition to happen. But nearly 65% of the homes have been able to, adhere to the new regulations. In many cases, we have heard that it's cable operator who's calling the shots, making a best fit plan rather than going or a pack for the consumer rather than going by the pack which has been given by the broadcaster. The broadcaster doesn't have any choice there or any leverage which he used to have earlier, because ultimately it's at the hands of the local cable operators which has been done, and that's hitting the industry badly because look, LCOs are of the opinion that you have a Geo Giga Fiber coming up in the early in this year
shortly,
and when that happens, they will anyways be going to hit, so they want to make the money at this point in time. That's a very short-sighted view which is coming in from some of the LCOs. But the fact is that across genres, few things has come out. One, people are not willing to pay for content. Especially in rural areas, they are satisfied with all the free content which is coming in, because TRA allows them 130 rupees for 100 free channels. So there is, because of that, there's a and this 100 channels have all genres of channels, which includes news, regional, religious, Hindi entertainment. English is not there much there, but it has all the basic ones for them, music, everything which is part of it. So especially in the rural areas, they are satisfied with the free-to-air channels, which they have been given, and they are not willing to pay for extra for the pay channel unless they feel there is a need. Now there is it's something like an Hashtag, which is a pay channel, still is on #1 because there is a need. People feel that they need to have Hashtag, so they are paying for Hashtag there. So that's one of the trends which are coming in. Then in the DD is creating a big disruption. DD has free dish, which is a DTH service. All the free channels are on the free dish, and the reach of that is much high. And as a result of which, we have channels like Dangal or Big Magic, which is now the top 2 watch channel across genres in the country. Sun, which used to be the biggest pre-tariff order, is #3 now. Sun is a pay channel, but still it is #3. But point is that these are the free channels which are now getting a big play in this entire new tariff order regime which has come in. The significant thing is the collapse of the English genre. English news, English entertainment, which is GEC, English movies. Significant 50 to 60% viewership has gone away.
It's gone away.
Gone away. And English is primarily in 6 mega cities, which accounts for 80% of the viewership. And there we have seen a shift of the consumer opting for
Amazon Prime,
Netflix, Hotstar. In fact, Hotstar, the Game of Thrones is coming on Hotstar and not on any of the GECs. So you have that urban consumer opting for OTT platforms, because now they have much better access to broadband and internet.
I'd be very intrigued, Sajid, to know, to try and guess if what's happening to English movies right now and English GEC right now, could at some point of time happen to Hindi GEC and Hindi movies. Simply, Hindi movies it might still be happening, but Hindi GEC simply because I think a lot of these guys are now trying to get Hindi content onto the on-demand platform.
So there is a lot of shift happening across genres. We have, if I to give you an idea, Hindi GEC has lost 16-17% in viewership. Hindi news has gone up because we have a new player who has come in, so there's an expansion which is there. But in English news, you have DD as #1 channel. DD News has a #1 English news channel which is coming in, which is free, which gives you an indication that people are willing to, are satisfied with the free channels which are coming in. They don't want to pay for additional. And that's a rural, tier 2, tier 3 kind of story which is coming in. In tier 1, people are moving away from cable operators to OTT platforms and getting what they want on those platforms, including Hindi movies and all, which is coming on maybe an Alt or a Heroes Now or a Z5
or Amazon Prime,
Amazon Prime or others. But these are the 3 domestic players which have more heavily into Hindi.
Sure.
So you are seeing a shift which is happening there. The budget, household budget, is getting squeezed and being used for OTT platforms in urban markets. Now it's not long when we're going to see the same thing percolate in tier 2 and tier 3 cities, because you have all these Airtels and the Vodafones which are pushing OTT platforms as part of the packages which are there. So a lot of new customers are getting added into those platforms. So it is a big disruption for the English genres for sure. As and when it happens to the Hindi genre,
we'll get to know.
It's a slow shift, but
sure.
If broadband goes on a high scale into these cities or tier 2, tier 3 cities, then you're going to see a big disruption happening there as well.
Interesting numbers. Sajid Bangat, thanks so much for putting that into perspective. Well, who would have thought that English GEC and English movies will see a backlash of this nature so soon? They were just starting to find their feet, I would thought, in the last 10 years. Anyways, that's the data that suggests that. And disruption in the industry. Would there be disruption in IT or not quite? Well, Wipro will tell us that. It too, though, may fall in line with its larger peers to post a muted growth in the March quarter with continued pressure on margins. Agam Vakil is standing by with what analysts are pricing in. Do you expect any kind of surprise from Wipro? Have they delivered a surprise in the last so many quarters?
No, Neeraj, the thing is that these stocks are so well tracked that it is really hard to put a very large positive or negative surprise, and it's a seasonally weak quarter, so we're not expecting fireworks. But I'm going to talk to you about your expectations from this particular quarter. So when it comes to IT services revenues, we're likely to see a 2% uptick, in line with what we've seen for Infosys and TCS at around a little over $2,086 million, and this is likely to be at the higher end of the guided range for Wipro that it did in the previous quarter. Revenues in rupee terms, absolutely flat at around 15,069 crores. EBIT margins likely to see a very marginal contraction by as much as 20 basis points to around 18.2%. Profit seen down by less than 1%, again at around 2,489 crores. What is going to be very important for Wipro in this quarter is its financial services business. And the reason here is because of the volatility that the entire sector has seen. While TCS did see very strong growth for financial services, Infosys actually saw a contraction, which leads to the question, will Wipro go the TCS or the Infosys way? And because of the fact that it contributes the most in terms of revenues, once again, it is going to be a very important vertical to watch out for as far as Wipro is concerned. When it comes to energy, healthcare, manufacturing verticals, again, we're expecting mixed performances. And given the fact that we are looking at a little bit of contraction in terms of expectation, this could be perhaps because of the appreciation of the Indian rupee against the US dollar. This appreciation isn't significant, but whatever it is, it may work against Wipro, as it has worked against something like a TCS or Infosys for that matter. But moving on, in terms of guidance, What are we expecting? Well, not too much. Subdued guidance, but when it comes to this particular quarter, again, we were expecting a sequential growth of 0% to 2%. And as I suggested, it's likely to come in at the higher end of the guided range. There is also another important aspect for as far as Wipro is concerned, and that, of course, is the buyback. The company will consider its third straight buyback, and this time around, the expectation is that could be one of the higher valuations are somewhere around 11,900 to 12,000 crores. The company has plenty of cash on its book, so it can be very flexible with a buyback. In fact, more than half of what the stipulated buyback could be. And this time around, at least according to Nomura, we will likely see the company buy back equity worth a little over 6%. But that's just one brokerage's point of view. And it has plenty of cash, as I've already mentioned. So besides the buyback, we are not expecting too much in terms of the earnings for Wipro.
So maybe that's the bigger news and not necessarily the earnings. Agam Vakil, thanks so much for putting that into perspective. It's been busy the last few days. If you're an IT company watcher and IT company analyst, the numbers coming in by, well, it doesn't sound. There'll also be Mastech that will come out with numbers today. So important from a mid-cap IT perspective. That's all that we have on First Word today. There are lots more lined up on Indian Open. We get in Mahesh Patil of Aditya Birla Sun Life AMC to talk about what domestic mutual funds are doing in a scenario like this. Talk about business outlook for Century Ply with Managing Director Sanjay Agarwal, and decode the March quarter earnings for GTPL Hathway with Chief Strategy Officer Piyush Pankaj. But after this break, a full tilt towards the day's trade.
What is the meaning of this word suspense?